Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. Today is a risk-off day across the global markets, though as we speak, there is a bit of an intraday recovery taking place. Let's pull out the Japanese markets, for instance. Extremely volatile over there. So the Nikkei has now seen a recovery of nearly 400 points from the low point of the day to get back into the green territory. So that's higher by close to about 170 points. Pull up the Korean markets. That too has seen about a 0.7% recovery from the lows. The intraday of the Korean markets, if we can, that will be up for you on your screen. The Indian markets too have seen about a bit of a recovery, about 40 points from the lows. So still down about 300 points in the Sensex, but at one point of time we were down close to about 400 points. So there you go. We have some recovery taking place. Let's see how the second half of the trading session pans out. For now, of course, volumes are on the lower side, so that exaggerates the moves across the global markets. Weak, but showing some signs of life now.
Absolutely weak, but showing some signs of life across the globe. That is something important. But for the Nifty itself, remember, just over the last 4 trading sessions, we've lost nearly 400 points on the Nifty, and this is the expiry week. So bears have that sort of ammunition. And currently where we are, 10,580 thereabouts, is exactly where the 50-day moving average is as well. So let's see whether that holds on or not. Can we sustainably go above that or not? The series low, of course, is 10,334. Important to see just ahead of expiry the fight which is taking place between the bulls and bears, and that is for a broader range of 10,450 to 10,650. Why do I say that? Because as we speak, the 10,600 call, close to 26 lakh shares added in open interest. The premium eroded by 65 points. Currently available is around 35 points. Add to that, on the lower end is the 10,500 put, which is seeing some writing. So the 10,500 put, as we speak, has added in excess of around 16 lakh shares in open interest for a premium of 20 rupees. So the smart money, if they're looking to sell the straddle, which is the 10,600 put and the 10,500 put and the 10,600 call, would do so for a combined premium of 50 rupees. That's telling you the broader range would be 10,450 to 10,650.
All right, let's straight away address all the stocks that are moving and shaking in trade. All our colleagues are joining in, and we've got HUL, which is on our list. Mangalam, they have not passed on the GST benefit to the consumers, looks like, and there's a penalty now.
That's what the Anti-Profiteering agency thinks, because as per HUL, they think that they've passed it on, and they've passed on around 160 crores and submitted it with the Consumers Welfare Fund. So the National Anti-Profiteering Authority has issued orders against the company. They say that the company has made profiteered on account of the GST rate cut to the tune of 535 crores. On its part, Hindustan Unilever says that they've suo moto deposited 160 crores into the government Consumer Welfare Fund, and this was something in the third quarter of FY18 itself. So that is something that the company has said, and they've passed on the benefits to the consumers via price cuts or increase in grammage. It is important to see what the government makes of it and where this goes, primarily because, Rima, for FMCG companies, price points are very important. If the rate is rationalized by, say, 10% and something is available for 5 rupees, it's not easy for the companies to sell it for 4 rupees 50 paise. It's easier for them to sell it at 5 rupees. So what they do is they increase the grammage, and that's how they pass the benefits. So let's see what happens. As of now, the stock is seeing a recovery from the lows, still sitting with a cut of about 0.8%. But you're tracking the auto sector. Rajiv Bajaj, the MD of Bajaj Auto, said that even though Q4 will be muted for the industry, double-digit growth would continue into FY20. In an exclusive conversation with cnbc TV18, he said that they're also planning to enter the electric vehicle category by the year 2020. Listen in.
Q4 growth will be very muted for the industry. In terms of primary sales from companies to dealerships, although retail will continue at, let's say, the 10% year-on-year growth that we've been witnessing. I have no specific reason to believe that FY20 should be significantly better or worse. So, it's hard to predict the future, but I would assume this level of double-digit growth to continue. I think the biggest challenge for the industry is going to be to make this transition over these 2 norms related to safety and emission over, let's say, the next 12 months. So that's a big challenge for all of us. We will come in with electric vehicles for personal use at the top of the pyramid, because all new technology does well when it comes in at the top, because those consumers appreciate it and can afford it, and you don't have to bleed to introduce it. Now, whether it will be a scooter or a motorcycle, as I've said before, time will tell, but definitely before 2020, both in the personal space in the form of a scooter or a motorcycle, and in the commercial space in our three-wheeler and quadricycle, we intend to be there with electric vehicles. As far as scooters is concerned, this is again a very large industry, 500, 600,000 a month, with very well established players like Honda and TVS, who are number 1 and number 2. So I think, if there is one formula for success in this industry, quite simply it is differentiation. And Bajaj would have nothing to bring to the table if it were to introduce to the market the 50th 100cc or 125cc scooter.
Okay, let's move on. Sonal is also here with us in the studio. Sonal, why are you watching Brigade Enterprises?
Well, that is one stock that is doing really well in a weak market, and that is because Motilal Oswal is betting big on the stock. They have initiated a coverage on the stock with a target price of 282 rupees per share, and they think the company will do better going ahead because there's a tactical shift in the segment that they'll be getting into. So basically, right now they're into leasing, residential and hospitality business, and gradually they're moving more towards the leasing business. They also expect that the company will be adding close to 4 million square feet of leasable area in next 5 years, and will be able to sell around 7.8 million square feet of properties amounting to around 4,100 crore rupees in next 2 years. Apart from that, they also expect the leasing income to grow by around 2.5 times by FY22, and expect the EBITDA overall to increase to around 107 crores. Currently, in FY18, they've been able to do EBITDA of around 59 crores, so they expect it to almost double by FY21. They are also expecting the company to sell a cumulative 7.8 million square feet of properties by around FY21 for 4,100 crore rupees. So overall, very positive on the company. Expect an upside of around 30% from current levels. Back to you.
All right, Sonal, thanks a lot for that. That is Brigade Enterprises, up about 5.5%. But one stock which is not doing too well is Jubilant FoodWorks. Well, just over the last 2 trading sessions, if you take a look at Jubilant FoodWorks, it's down about 12-13%, though it is off the lows as we speak right now. But, the street is worried about a couple of things. On December 20th, Swiggy announced that they had $1 billion worth funding that has come by to them. And this is not seen positively by investors in Jubilant Food. That is primarily because if you remember the post-second quarter earnings call, the management had said increase in competitive intensity has been driven by food aggregators and e-commerce players. This is before Swiggy and other companies had gotten money. Now that they have gotten money, competitive intensity is likely to increase, and that is what is worrying the street. Add to that, remember, as we go into the next couple of quarters, we're working with a high base of same-store sales growth. So the last 4 quarters have been 18, 26, 26 and 21% in terms of same-store sales growth. So let's see on a high base, what does the company do? And the stock has seen a huge rally from levels of 350 to higher levels. And let's see where the buck stops as far as Jubilant's same-store sales growth are concerned.
Okay, a quick recap then of the top buzzing stocks. HUL, Bajaj Auto, Brigade Enterprises, as well as Jubilant FoodWorks. Okay, back to the markets then. The sell-off in the global markets has trickled down to India. Earlier today, we spoke to Ajay Srivastava of Dimensions Corp Financial Services, who says that there is no need to panic right now, adds that India is in a comfortable situation on the liquidity front. Listen in.
I don't think we need to respond to a situation like today or this happening because, one, the markets are very illiquid at this point of time, so market moves are also very accentuated. So it's not that fundamentally you will have a major problem when we come back after the New Year's. I think so you need to wait, take the call after New Year's. Do not panic out in this market. It's an illiquid market, it's a weak market, things will happen, exaggerations will happen. I think this listed market is going to go up as a whole. Unlisted stocks, perhaps valuation will come down, or you'll find substantial funds shifting out from private equity space to this space. So, look at the 2 parallel universe and you'll realize that how big the difference is right now in valuation metrics in transaction in that space and this space, which gives you comfort that liquidity-wise, we are still okay in the world markets, and India-wise also we are still okay, and therefore do not panic out in this market. I think 2019 is going to be a stupendous year for India. It's going to be a stupendous year for India, by and large. Everything is working for us. We are at our lowest that we can be. It can't get worse than this. We will go up only.
All right, 2019 will be a stupendous year for India, says Ajay of Dimensions. But just keep an eye out on the markets. We're seeing a fair amount of recovery. Closing in on the 10,600 mark, we can say we've comfortably crossed the 50-day moving average of 10,580. And leading the pack higher, we have JSW Steel. Metals weren't doing well all of last week and all of last month. Currently seeing a recovery. JSW Steel is at the high point of the day, broken into the green. Along with that, we have Axis Bank too, not doing too badly actually. 2.5% recovery on Axis Bank, and the index heavyweight L&T. That one should come up for you. Was trading in the red for most part of the day, and now L&T too has moved higher. Along with that, we're seeing a lot of these mid-cap stocks which have moved higher too. Escorts, for instance, has now moved to the high point of the day. But on a quick programming reminder, CNBC TV 18 launches a special initiative in partnership with the National Stock Exchange. Every month, we tell you how investing in the stock markets or equities makes one financially disciplined. This is a monthly program to inform, educate investors about smart investing and enabling the journey to wealth creation. Catch our special coverage all through the day only on CNBC TV 18.
Let's slip into a short break. Up next, Titagarh Wagons will be in focus as the company successfully launched the first of the coastal research vessels being built for the National Institute of Ocean Technology. Umesh Chaudhary, the Vice Chairman and MD of Titagarh Wagons, joins in on the other side.